On Business Incorporated today. Central Bank of Kenya retains a lending rate at 7.0%. Nigeria to receive $2 billion from the United Arab Emirates. And Madagascar farmers to get $5.8 million from the United States aid. You're welcome to the program. I'm Ini John Mekwa. Well, let's start off as usual with trading activities in major markets in Africa, starting from Nigeria, where following the bearish sentiment of the NGX yesterday at intraday, the market had shared 0.14% at over 43,000 points. JSE of South Africa was on the flip side, though 0.08% up, while EGX 30 of Egypt did much better. It was up 0.58%, while the Nairobi Stock Exchange closed unchanged from yesterday. In the Middle East, it was mixed sentiment at intraday. Abu Dhabi index was up, but not as much as it was yesterday. Yesterday, it was a massive 2% up, but today it was just a little less than 1%. Dubai's index was also positive, almost 0.5%, and still within the region. Saudi Arabia and Qatar indexes were trading negative at intraday. We move to Europe now. Markets are down once again because of Omicron fears. This comes after the CEO of vaccine makers Moderna said that the current vaccine may be less effective against Omicron. Well, we have joining us from Berlin is Chiponda to bring us up to date on what's happening there. Hello, Chiponda. Good afternoon.
Good afternoon, Ini.
Good to speak with you. Well, just how much of a concern are these comments, following Omicron and the reactions of the market?
Well, of course, these concerns are a major deal for the markets because, of course, yesterday we saw those minor gains because, of course, investors had been hoping that the vaccines could be resistant to the new COVID variant Omicron. But now, of course, with that statement, that may not be the case. Of course, they just don't know how much they would be affected, but that is something that they have to still wait and see. And they're digesting that information from Moderna's CEO. But on top of that, they're also digesting a statement from Fed Chair Jerome Powell, U.S. Fed Chair Jerome Powell, and he had released a statement ahead of his testimony today in front of the Senate Banking Committee, where he will be talking about the new variant and how it might affect also the U.S. economy. And he has said that it would affect the Fed's goals of achieving maximum employment and also of stabilizing prices in the U.S. Because, of course, with this new COVID variant, less people might want to rejoin the job market. A lot of Americans have also stepped out of the job market because, of course, of the pandemic, to take care of, loved ones at home, or just because maybe they are afraid to catch the virus, the coronavirus. And that is one reason they are afraid, because, of course, that could affect supply chains. And supply chains have also contributed to inflation as well. So this is why this is such a big deal, not just for the U.S. economy, but also for the global economy. So this is something that investors will also be looking to, that testimony by Fed Chair Jerome Powell in front of the Senate Banking Committee later today.
And so let's see how it's also affecting Germany. You still have inflation, which went up to 5.2% in November. That's the highest in nearly 30 years. And now you have this new variant. So this is like a twin shock on Germany.
Yes, it is. Of course, I mean, the new variant comes at a time when we have this COVID surge, and then, of course, we have high inflation figures. It is really a double whammy, as you might call it, twin shock for the German economy as well. And, of course, here in Germany, we also had, for instance, a warning by civil servants. They wanted to strike because, of course, they were complaining about the fact that their incomes were not rising as fast as inflation. Of course, the government was able to reach an agreement with those civil service workers. They were able to give them that wage hike they were asking for, but it also doesn't kind of counter inflation, and that is not the case also for most workers here in Germany. They haven't been able to get wage hikes. So a lot of people are feeling the pinch where it hurts in their wallets, and that is a big deal, not just for people, consumers. It's also a big deal for the German economy because, of course, people can't just go out and shop as much as they would like to because, of course, prices are increasing way faster than their incomes. And, of course, we know that retail also contributed to the economic recovery here in Germany. And so this is something that investors will also be watching very closely. And, of course, we've also had a warning from Germany's central bank, the Bundesbank. At the beginning of last week, they had said that GDP growth in the fourth quarter of this year would stall. And now, of course, we have this new COVID variant and also more restrictions as a result of the COVID surge in Germany. So it is hard to say just how much it will impact the German economy.
And what kind of response are we expecting from the European Central Bank?
Yes, I mean, inflation is a major problem, not just for Germany, but for the entire Eurozone. I mean, it's also very high in Spain, where it's at 5.6%, and that's the highest level in 3 decades. France has also, released figures which show that inflation is the highest level in more than a decade. So it's a big problem for all of the Eurozone. But ECB policymakers are saying that they won't intervene just yet. They're still calling it transitory. Of course, just what they call transitory and for how long is still a question for a lot of people as well, because of course a lot of experts are saying that this could go on until at the end of next year and the beginning of 2023. It would take maybe that amount of time for inflation rates to get down to the level of 2%, which is the ECB target rate for inflation. But of course, the ECB policymakers are saying that they don't want to intervene just yet because, of course, they don't want to tighten monetary policy, and by doing that, perhaps even get in the way of the economic recovery that we have seen so far.
Well, I guess the world will have to talk about redefining the word transitory. Well, thank you so much, Uponda, for bringing us up to date on happenings in Europe.
Thank you, Ini.
So let's move over to Asia now. Major Asia-Pacific markets fell today as investors in the region continue to track developments surrounding the Omicron variant. South Korea's Kospi led losses among the region's major markets, declining 2.42% to close at 2,839.01. Hong Kong's Hang Seng Index also fell 1.58% to 23,475.26. In Southeast Asia, the Straits Times Index in Singapore fell 1.52% as of about 4 p.m. in this local time. Japan's Nikkei 225 dropped 1.63% to close at 27,821.76. While the Topics Index shed 1.03% to 1,928.35. The Japanese yen, often seen as a safe haven currency, strengthened to 113.13 per dollar as compared with levels around 113.9 seen earlier against the greenback. Mainland Chinese stocks closed mixed, with the Shanghai Composite marginally higher at over 3,000, while the Shenzhen Component fell about 0.1% to 14,795.73. S&P and AX 200 in Asia advanced 0.22% on the day to over 7,000 points. MCSI's Broadex Index of Asia-Pacific shares outside Japan fell 0.51%. In the United States, stocks tumbled in early Tuesday trading, reversing from a rebound on Wall Street as investors reassess risks associated with the new Omicron COVID variant. Features on the Dow Jones Industrial Average dropped 1.43%. S&P 500 features tumbled 1.2%, and NASDAQ 100 features also slid into negative territory. Expedia Group fell 2.3%. Norwegian Cruise Line Holdings tumbled 3.8%. And American Airlines shares were off 3.3%. Some leading pharma stocks also took a hit, with Moderna getting the worst of it as the stock decreased 4.2%. Pfizer, however, was one of the few companies to post gains on the S&P 500, rising 1.2%. Well, just before we go on break, let's see what's happening in Kenya. And we see that in Kenya, the central bank has held its benchmark lending rate at 7%, citing anchored price increases and early indications of the economy benefiting from accommodative stance. The decision to hold state is the 11th in a row. Year-on-year inflation edged down 6.5% in October from 6.9% the previous month. month as the government's effort to stabilize retail fuel prices started to have an impact. And still in Kenya, the completion of the new Kipevu oil terminal in Mombasa in the country has been completed and expected to double its capacity to handle transit petroleum products to Uganda, Rwanda, and Burundi starting from January next year. And a $385 million terminal has the capacity to handle up to 4 vessels at a time, compared with the old terminal that can handle only 1. The terminal is expected to cut costs of petroleum products by reducing the cost of demurrage or the extra time taken to load and unload cargo, a big factor to the high cost of oil in the region. It should also reduce cost of gas by 30% once it is operational. Well, let's see what's happening in the UK now. And just when the world started getting used to living with the Delta variant and adjusting, Omicron shows up, and in just about a week, less than a week, this was just on Friday, this new variant has affected travels and economies. We have Juliana joining us from our London studios to bring us up to date on how it is affecting economy in the UK and, of course, corporate. Hello, Juliana, good to see you.
Nice to see you again, Innie.
Good to see you. So EasyJet is saying that bookings are already affected. How widespread is this impact of Omicron? I know as of this afternoon in the UK, we had about 14 cases of it.
Yeah, it's not great, and no surprises that EasyJet, the low-budget carrier, has said that a cloud of uncertainty is remaining, and it's affecting their bookings for the final quarter of the year. They said bookings are at the 65% of pre-pandemic levels, and that's because there's been a raft of new restrictions that different countries have been brought in. Even if you are double vaccinated and you're British or Irish and you're travelling back into the UK from a country other than, or a region other than Southern Africa, you still have to self-isolate for 2 days until you get a negative result back from your PCR test. So this is certainly affecting bookings. Although EasyJet are still remaining positive about the summer, they're saying that bookings are showing that they could potentially be a recovery for the tourism industry in summer 2022. Of course, that's not going to help before Christmas, but they made those statements in a trading update today, showing that yet again they've lost over £1 billion worth of losses. Obviously, this is all due to COVID-19, and this is exactly almost similar to what they lost this time last year, and that's why their shares were trading down 1.9% at early trading.
And companies are also adjusting, to this new variant. We're hearing of new rules. Any ideas what they're bringing up back?
They are adjusting, Innie. We're getting an update from the Prime Minister, Boris Johnson, at 4 p.m. today. I believe that's about 5 p.m. In Lagos. Lots of people are going to be highly anticipating what exactly is the Prime Minister going to say, because he's already given a televised address, which he did on Saturday. We were told yesterday afternoon, after a conference, after a statement delivered by the Health Secretary, Sajid Javid, in the House of Commons, that we wouldn't be receiving an update from the Prime Minister in 3 weeks. So there are major concerns that there could potentially be some sort of lockdown or some sort of further restrictions other than the mandatory mask wearing that came into fruition today. So now, whether you're in a hair salon, any public place, a communal area, you must cover your face. So there are major concerns. In terms of Christmas parties, that's all up in the air. We know the hospitality industry was scarred when, almost at the same time last year, Boris Johnson decided to shut off the hospitality and non-essential retail sector because of the Delta variant. Christmas party bookings are still going on, but rather than the 50, 60, 100, in fact, if you're a big corp, thousands of individuals, they'll be in much smaller clusters between 20 and 40 guests. But we just have to wait to see what the Prime Minister is going to tell us, Innie.
Yeah, we'll certainly get updates on tomorrow's program. But this morning, the FTSE 100 had lost 75 points. Do tell us how the market is trading at this time, and this is obviously connected to Omicron.
Absolutely, Omicron dominating sentiment. We're not seeing losses as bad as we saw on Friday's sell-off, but still really, really bad. We're at the last day of November. I think economists are now saying that the FTSE would have experienced its worst month since October 2020. So we've come a long way, but now those losses are extending. The FTSE All Share is down 1.10%. The FTSE 100 is down by 1.23%. And the FTSE 250 at intraday is down 1.26%. In the currencies market, the British pound is up on the US dollar just by 0.21%, though it's down on the euro by 0.34% and up on the Japanese yen by 0.68%. No surprises that Intercontinental Hotels, BA owner IAG, all of the travel and leisure related stocks are trading in the red today.
Wow. Well, we'll see how this goes. Well, thank you so much, Juliana. Enjoy the rest of your day.
Thanks, Ine.
So we'll take a break now. When we come back, we'll delve into happenings on the African continent. To stay with us is Business Incorporated on Channels Television. Welcome back. You're still watching Business Incorporated on Channels Television. Now, the report by S&P Global shows that cobalt prices have risen by over 88%, in fact, almost 89% this year alone. It went from about $16 to $30 from January to November. This is the highest level since December 2018. Cobalt is an important chemical element used to make airbags in automobiles, also serves as catalysts for the petroleum and chemical industries. It's also used for hard metals and diamond tools. So now let's find out the impact and reaction to this surge in the price of cobalt with Lawrence Messi. He is an analyst with Financial Derivatives Company. Hello, Lawrence. Good afternoon.
Good afternoon. Thank you for having me.
Good to have you. So, given that the Democratic Republic of Congo accounts for 70% of global cobalt production, with Russia and Australia making up for the deficit, what's the cost of this runaway price increase? What's the cost of it, and how has it affected demand so far?
To start with, on the onset of the pandemic, there's been a recovery in demand, especially due to the change of working environment of smartphones and technology and laptop as well. Cobalt is an essential element in the production of portable electronics, which these devices fall under. Also, the new view on climate sustainability has spurred the production of electric vehicles worldwide. And as such, there's been an increase in production. We've seen Tesla that has gotten a massive load of orders from heads. So this global increase in electric vehicle production has spurred the demand for more cobalt, which is a key component in the lithium-ion batteries that recharge these electric vehicles. So this increase in demand has actually not been met by the production and supply capacity of cobalt. And this has caused an increase in price, but that's just from the demand side. If you look at the supply side, there's been some logistical constraints due to shortage of shipping vessels and increase in tariffs. So reports also by S&P Global also show that Transnet, which is actually a state-owned logistic company in South Africa, has increased tariffs, which is set to also increase the cost of shipping and transportation. And this is interesting because South Africa is actually the route by which cobalt is exported from the Democratic Republic of Congo into the Western world.
So given that the production of cobalt is concentrated in mostly politically unstable regions, how do we expect this to affect production, supply, and demand in the coming years?
Well, that's an interesting one because political instability is a very sensitive issue. And any spike in either the positive or negative direction is rather unpredictable. But let's look at it from a negative direction. So any negative outlook in the political sense will actually cause a lot of disruption in the mining of cobalt in Democratic Republic of Congo, which is the largest producer and one of the largest unstable regions in the world. And so when a lot of the reserves of cobalt is situated in just Congo and there's political instability, we can expect that there will be a crackdown globally because and when this crackdown occurs, we can expect that prices will go high, and we can expect that production will lessen. And also, political instability also has its effect on the international relations that govern the international trade policies of cobalt. Then in terms of demand is always going to remain constant because the drive for climate sustainability is going to remain the same, and there's going to be a lot more production of EVs and a lot more in terms of innovation and smart tools. So demand we can expect to keep rising. But when political instability hits, then we can expect production to halt, we can expect prices to rise, and we can expect a flurry in the entire global market for cobalt.
So Nigeria does have a sizable deposit of cobalt. Are there plans to explore this?
Well, there's been some reports that solid minerals is becoming an interest of major players in the mining industry, but still nothing substantial. Other reports also show that solid mineral exploration in Nigeria is still largely untapped. And of course, the main reason for this would be security and the capital intensiveness of the industry. And we can expect that for Nigeria to solve this, first there needs to be a structural overhaul, which starts first with making it a safer environment for mines to actually even be a feasible workplace. So there needs to be a solution to security, especially in the regions where minerals are most occurring. And then from there, there needs to be an entire ecosystem which allows mining to actually be a feasible venture. This might include the establishment of buying centers. So once you mine, there's an offtake agreement for buyers. But generally, solid minerals are untapped in Nigeria, and we can expect maybe future development, but for now, that's largely uncertain.
All right, Lawrence, thank you so much for that update on cobalt's production and the surge in its price. Enjoy the rest of your day.
Thank you.
Let's go to South Africa now. So while the president of South Africa is in Nigeria, meeting with Nigeria's President Muhammadu Buhari with a whole lineup of activities, we can tell you that records from South Africa shows that there's been an increase of unemployment to 34.9% for the third quarter of the year. And this figure was 0.5% from the second quarter figure, which was at 34.4%. A survey found that the number of employed persons decreased by over 660,000 in the third quarter of 2021 to 14.3 million, while the number of unemployed persons decreased by 183,000 to 7.6 million compared to the second quarter of 2021.
What we have seen.
Well, I would like to give you updates from Uganda, a story that's been in the news for some time now. Uganda has dismissed report that it has given away Entebbe International Airport to China over debt. A statement from the Uganda Civil Aviation Authority reportedly suggests that some provisions in the financing agreement with China expose Entebbe International Airport and other Ugandan assets to be attached and taken over by Chinese lenders upon arbitration. However, according to Uganda Civil Aviation Authority, the arrangement is only similar to what happens when one gets a salary loan and the bank requests that the salary is channeled through their bank. It does not mean that the lending bank takes over the borrower's salary. According to the statement, the loan terms provide a grace period of 7 years, and the country is still within the grace period. And as part of efforts to support Nigeria's mines and steel development sector, the Office of the Past Ruler of Abu Dhabi, United Arab Emirates, has pledged $2 billion to Nigeria. According to the donors, that's His Royal Highness Sheikh Hadam bin Khalifa and Global Peace Ambassador of the United Nations, the donation is to further tighten trade and bilateral relations that exists between the two countries. Nigeria's Minister of State Mines and Steel Development said that, speaking on behalf of the beneficiary country, expressed the President Muhammadu Buhari's led administration's determination to consolidate on the gains of diversification of it as it forms the critical backbone of industrialization. Well, that's all we can take on the program today. Thank you so much for being a part of it. I'm Ini John Mekwa.